Hi, Harry here with the rant for October 31st, Halloween. And hopefully this gets a little scary for the markets, because now the markets have no fear. They have been supported, stimulated, government deficits out of the wazoo. Fed always prints money they need to keep the economy going. The markets basically have no fear. One of the key triggers of the 1929 to 32 crash was the tariffs. Well, we've got tariffs coming on big time, a little bit haphazardly, but and the market's still edging up. Trump's volatility. He's not the type of guy that makes people feel good, except he is pro-business. So that's what we have. We got the markets still edging up, and after the Fed has had the biggest tightening since the early 80s, okay? This just shouldn't happen. And folks, a lot of people think, oh, they're easing now. No, they're reversing the tightening, and very slowly. They're still net tight, okay? And have to get down to about 300 basis points, okay, on the Fed funds rate. So a good bit farther down from here, just to be neutral. So again, a lot of momentum, a lot of hype, and of course, now it's AI. AI is the big deal. And of course, what was it in the first tech bubble? It was the internet. And who was the darling of the internet? Cisco was kind of like the darling stock in that rally into late 99, early 2000, okay? And today, who is that? Nvidia. So, real quickly, and people know, my favorite leading indicator is still Bitcoin, because crypto is a huge new emerging sector. And again, most people still don't understand what crypto is. Best definition I heard, okay, at my own conference, okay, the digitization of all financial services and money. And that number is 630 trillion and still growing, okay? It's the biggest number in the world. So this is the next big thing. So Bitcoin is the leader of that. So Bitcoin is my best leading indicator for stocks. And Bitcoin, by the way, folks, has already, thus far, peaked back on October 6th, weeks ago, at 125,400 approximately intraday, okay? Peaked and went down 17%. So that is more than a correction, okay? And bounced back to a little over 115,000 where it had clear resistance, okay? And it's backed off of that, back down to 109, and now it's at, I think, a little over $110,000 looks like today, okay? So if Bitcoin has peaked, stocks should follow, and they should follow like within about a month, give or take. So stocks should follow soon, even though they're only a couple percent off their recent peak, okay? So this may have been a peak, and I warned subscribers in an update recently that this final Nvidia rally here could be it, and it could still be it. And again, Nvidia is the second stock I'm looking at, because that's the darling of AI. Okay. People always ask me, say, Harry, well, did you see AI coming? I said, look, back in my best-selling book, The Roaring 2000s, in early 1998, the whole center of the book was about what I called the automation of management and professional work. That's what I called AI. There wasn't a name AI back then. But so I look at automation throughout all of history as the levels of work, the types of work that gets automated. And obviously the first thing we did in the 1800s was automate farming. Over 50% of us were farmers or directly involved in agriculture. And now less than 1.5% produce all the food we can eat. And we're big exporters on top of that, okay? So this is the power of automation. People who worry about losing jobs don't understand progress in automation, okay? It's always creating better, higher level, or more creative, and now more entrepreneurial jobs, okay? So that's why Bitcoin's so important here. And Nvidia, because again, these two together represent the two emerging sectors, and they need to peak. And Bitcoin tends to lead the most. So with Bitcoin down and does not look likely to make a new high. Now, I'll let you know, I'll let especially subscribers know an update if Bitcoin does look like. Bitcoin is not threatening to make a new high. Nvidia is still close to its highs and could make a new high, but I think we are very, very close to a peak. And I want to see, my next thing I'm looking at, I want to see Nvidia finally take a good hit down. So that's what all of us should be looking for in the next week or two. If we see Nvidia now back off, it increases the odds we have seen not just the top, but the top of our lifetimes is what we're potentially looking at here, okay? And again, this has been put off a long time. Never before has this happened, okay? The 2000 bubble came right in time with the internet moving mainstream and peaked with it. It didn't just keep going up. It didn't have stimulus behind it. 29 trillion now and still rising at this time, okay? So it is this 29 trillion that has taken this second bubble, tech bubble, which should have peaked around late 2019 to late 20, crashed into the decennial cycle and the 45-year cycle down from 21 on. That should have been the crash, 2020 to 22. Now we're looking at that crash being potentially, basically, 2006 to 2028, with a top in this time frame. And again, what's the best months for a long-term top? They're also the best months for a correction, but it's September and October. So we're right here at the end of October, and I'm just hoping, folks, because I'd like to see this thing get over with and move on. And enough of this endless bubble and endless stimulus. This is October's the last really good month. This is a good time to see a peak, and still a little late side of that. So I'll just have to keep you updated, keep watching this. This is the final frontier of automation as we know it. And people keep asking me, well, if we do automate professional and managerial work, that's kind of like our top 10 to 20% of educated workers and pay and everything. Well, what are we going to do next? Again, everybody's going to have to become more of an entrepreneur. I mean, I don't fear this automation. I started my own business with unique research I did. I don't compete with anybody. There's nobody doing what I do in demographic research or in cycle research to this degree. There's a few other good cycle people, but not many. So everybody has to find what they do best and turn it into a little micro business, whether it be inside a smaller or larger corporation, or you go on your own like me and become either a radical entrepreneur, which is the best. That's the one thing you can't automate. When you're creating something new, you can't automate that yet by definition. Or at least an incremental entrepreneur, somebody that finds niches in certain pockets of the economy or in certain geographic locales where they can do something different and run their own business. But I tell you, the best thing to do is to carve out your own niche within a company that has much more stability for the ups and downs and to grow and compete. And I, in the Roaring 2000s book, where I first talked about this automation of management and professional work, that again, my definition of AI, I was also saying, that this is, everybody's going to have to become an entrepreneur down the road in some way or the other. Everybody's going to have to create something new enough that it can't be automated. But for now, automation will proceed. This is a positive thing. We are not going to lose more jobs than we gain, never have in all of history, so I don't see any reason for that to start now. And nothing more productive than to automate the highest educated, highest performing people in our economy, managerial and professional people, and free them up to be more entrepreneurial. Again, my career, I did not even plan this. I came out of Harvard Business School and knew I didn't want to go work for large corporations, because I did that after college for a couple years, tried that out. Now they're just too bureaucratic. So I worked for Bain & Company, consulting to Fortune 100 companies. But we were still consulting, although we were leading edge as a company and dynamic, we're still consulting to these older line bureaucratic companies. So that didn't work for me, and I finally realized, well, I can bring the same consulting to new ventures and small businesses in California. And that's what really started my career. And then I ended up starting my own business. And my business is a radical business. There is nobody doing what I do for now. And I'd welcome people to copy me, because it would just help what I'm doing grow. So that's what everybody has to think. What can you do that's unique enough? What can you turn into a business? And if you can do it within a company and carve out yourself so you get rewarded on the profits you create, then you've got something really stable and creative at the same time. And that's how I see the economy growing. Everyone an entrepreneur, okay? Every customer a market, every frontline group a business serving one of those markets. That's how businesses large and small should grow in the future. So all of this automation, all of this reorganization is a good thing. And do not ever listen to anybody that says, we're going to lose all our jobs, okay? That is BS. That has never happened and never will happen. We'd all be farmers scratching the dirt, making almost nothing, okay, if we had not done this continuously throughout history. So this is good stuff, but we are now overdue for not a minor, likely a major crash, which should have happened, again, between late 2019 and late 2022 or so. That's what should have happened. It should have been bigger than the 2008 to 9 crash, and now we should have that now. And people say, well, Harry, I mean, your demographics are up now. Yeah, well, my demographics were down when we had the greatest bubble in history here, okay? So it can go that way. We can have a major crash during times when demographics are still on the strong side because we created a bubble so far, so stretched. And again, no bubble like this in history. No bubble. This bubble really has lasted almost 17 years now. And even the last 5 to 6 years, which is the traditional bubble trajectory, has been more bubbly. And even that has lasted a little longer and been stronger than most bubbles throughout history. So we are due for a major crash. And again, I'll keep you updated, but I think it's increasingly likely to happen between now and January. First crashes only take 2 to 3 months, and they're 42% average, and the 29 to 32 was 49% in just 3 months. So that's how this goes. If you wait to see if we're right here, it's going to happen faster than anybody can react. And that's why it's better to be safe than sorry, even if we miss the last part of this boom that keeps edging up. So again, I will keep you updated.